Welcome to my channel. In this video I will show you the global version, the original, brand new top-selling ASCI Antminer product on AliExpress with discount price. JP Morgan is expanding its exchange-traded fund lineup with a new type of active fund, handing the reins to one of its highly rated mutual fund managers in hopes of building on its recent success in the ETF industry. The bank launches the JP Morgan Active Small Cap Value ETF, JPSV, on Wednesday with a goal to outperform the Russell 2000 index of small cap companies. The fund will be led by portfolio manager Lawrence Playford, who has a long track record in mutual funds. Playford co-manages two other mutual funds, the JP Morgan Small Cap Blend Fund and the JP Morgan Mid Cap Value Fund, both of which sport 4-star, silver ratings from Morningstar. Playford's Small Cap Fund, for example, was in the top quartile of small cap growth funds in 2022, according to Morningstar. The new JPSV fund, with an expense ratio of 0.74%, will operate as a semi-transparent ETF. That means that instead of publishing its exact holdings every day, the fund will instead publish a proxy portfolio that shows investors most of what the fund owns, but not at exact weights and possibly omitting new additions or subtractions. The model is supposed to be a hybrid between an ETF and a mutual fund by allowing managers some secrecy to make changes while still giving market makers enough information to help keep trading costs down. Active small cap value can be a compelling addition to investor portfolios. JPSV is our first ETF launched with the NYSE Active Proxy model, and we are confident this structure and portfolio will meet investor needs, Brian Lathe, head of America's ETFs at JP Morgan Asset Management, said in a statement. Semi-transparent ETFs were first given the green light by the Securities and Exchange Commission in 2019, and there have been some modest successes. The Nuveen Growth Opportunities ETF, NUGO, for example, has about $2 billion in assets under management and is outperforming in 2023. JP Morgan's ETF business has been a big winner in terms of gathering assets in recent months. The firm's Beta Builders Europe ETF, BBEU, and Equity Premium Income ETF, JEPI, are the top two ETFs for inflows so far this year, according to FactSet. Raking in more than $10 billion combined. Individual investors typically rely on big financial firms or financial advisors to provide them with direct indexing services. Building and managing a direct index portfolio is a time-consuming job that requires frequent rebalancing. Tax loss harvesting is direct indexing's superpower. Tax loss harvesting is when you sell off assets that have fallen in value to offset current or future gains from other sources. You may then replace the assets you sell with similar, but not identical, investments to position yourself for a rebound in the asset class. You can harvest tax losses at the fund level, sell shares of an underperforming index fund or ETF and replace them with a different fund. But you can't hone in on individual winning or losing securities within a fund. Maybe only a few stocks in 100 are responsible for a fund's sizable dip in performance. After all, direct indexing portfolios make it simple to handle precise tax loss harvesting, since it's easy to sell underperforming individual stocks. Take the cash from each tax loss sale and buy shares in similar companies to balance your portfolio's allocations. Meanwhile, you've generated a capital loss that you can use to reduce your overall tax liability. Not everyone can benefit from tax loss harvesting. Individual investors who earn $41,675 or less, $83,350 for married filing jointly. For similar reasons, direct indexing is not relevant to tax-advantaged retirement accounts, like a 401k or an individual retirement account. However, it's been established that the strategy works consistently across market conditions. The benefits can be significant, even when the market's on an overall upswing. Bloomberg reports that direct indexing providers estimate this kind of tax loss harvesting could raise returns by about 1% a year. Disclaimers. These choices may be out of date. All of these products may not be in stores. We don't know when this will be back in stock. You need to go top ASCI Antminer 2023 review link to see the most recent updates to the list. Thank you for watching. Please subscribe to this channel.